Hi, this is Zach Mir with the weekend edition of the Bulletin Board Heroes here at Zach's Traders Cafe for Sunday, the 16th of November. Starting off with the FTSE 100, which hit in fact, even exceeded the notional top of that rising trend channel to through 9900, the peak 9930 during the week, but we came back quite sharply for Thursday and Friday, bounced towards 9600. We already factored in 9574, which was the initial November support, so we stayed above that. But we need to see an end of day close back above 97.60 really to get us back into the groove for a breakout through the top of the old June rising trend channel there at 9900, then on to the top of the October price channel at 101 or 10,150, in other words. There is a worse breakdown than the potential levels there, 94.80 at the 50-day line, which I suppose is the odds on at the moment. And then worst case would be the floor of the June channel there at 94.20. But at the moment, hoping that 95.74 or thereabouts would stem the losses. The DAX is next, and here you can see that the situation not great. We had a sort of bull trap gap reversal, so that's not a great look at any time. So the gap higher on Wednesday and then falling back, and actually the 2-day island reversal, which is even worse. The only positive though, or a positive though, is the way that we had a decent recovery back on Friday afternoon, and we've also bounced again above a rising 200-day line. So on that basis, and maybe possibly on the basis of the FTSE, we're looking at a higher low there above the 200-day line, that 23,400. While we're above that, still then hoping that we'll stay in a range between around 23.5 and 24.5 in terms of thousands for the DAX. The Dow is next, and here you can see that we've got this market came back towards the 50-day line, or something which is factored in. Higher low above that so far, but obviously that's not it's still a work in progress. Floor of the channel there from back in July around 46,700, but the 50-day line there 46,600, probably more of a level to keep an eye out on or out for. In terms of the RSI, we're still above neutral 50, which is a positive, so that sort of gives us an early bird opportunity to assume that the pullback, the 2-day pullback, will all be all that we see. But of course, we do get back below that 50-day line on an end of day close basis, it would not be a good look. In terms of a potential recovery, then probably the old November resistance around 47,500 and end of day close above that would be the trigger for a move up to the top of the channel there, 49,200, which we're looking for or hoping for perhaps by the end of next month. Perhaps the top part of that channel not drawn entirely correctly. I think that's probably more accurate, but that's still going towards 49,000, whatever the case. Next on the list is are the cryptos. The first one is Bitcoin, and here still not a good look. The only positive here, or the a positive here, is that we bounced on the RSI 30 level, the oversold level, but this price action for the weekend to date looks like a bear flag, sort of continuation move, and certainly while there's no break back above to 97,000, looking for at least 93,000 and the old late April, early May support, and after that, and things look rather pear-shaped. The other point to note is that I saw somebody, Bright Spark on X, has pointed out we are looking at a scenario where the 50-day line has crossed below the 200-day moving average, and probably it's difficult to see on here, but that was mentioned as a death cross, which obviously by definition is not a good sounding thing. In terms of any upside at the moment, if we do get an intermediate rally or a rebound, then 103, 104, probably the best we're looking at this stage, especially after the multiple RSI failures that we've had below neutral 50. If Bitcoin's not looking good, then one would assume that Ethereum is not looking good either, and that is kind of the case. The only point, I suppose, of salvation here is that we haven't gone back below 3,000. Well, the floor of that channel there from August down towards 3020, so that is our destination at the moment, especially while we're below that uptrend line, the second uptrend line that we have from back in April, which is around 3250. But the 50-day line falling, still not a great look in terms of the lay of the land for Ethereum. On to gold, and here a situation where Managed to get back up to the resistance on the way down around 4160 and held above that so far. End of day close, though, back below 4160. We could be looking at either a test of the old April rising trend channel there at 3990, or more likely the 50-day line 3929. But still have I suppose, while we're above 4160, have a potential road towards 4600 by the end of next month. Perhaps the actual target there is like that, so just towards that 4600 level of that resistance line there, the 1 year resistance line. But at the moment, that seems a little bit of a tough task to get there by the end of next month. Moving on to the stocks, and starting off with one which I don't, not the type of stock I normally look at, but couldn't resist this one. We got bullish divergence there, so lower lows for November, but higher RSI trace. And we had the shares at the end of the week perched very nicely above the 50-day line there at £2.61. Above that for ASOS, looking for the top of the triangle there, 320 by the end of next year, at the end of this year rather, the end of next month. Although obviously, admittedly, that is quite a punchy call. Probably more realistic would be the 200-day line at just under £3. But while we're above the 50-day line, a decent risk reward potential trade there on ASOS. On to the situation at ACG Metals, where the dust is settling after the big fundraise that the company's delivered. Good to see that the shares are staying on the right side of recent support around £10.80. Above that, we're still looking for maybe an end of January target there as high as £14 for that particular company. On to Chesterfield, and here you can see that got a third attempt at spike into the upside. We've already hit we hit our first target there at around just below, around 1.15 pence. Second one there is up to 1.75, and we're looking for that by the end of this month, especially while we're above recent broken resistance around 1.35 pence. I'm still amazed to see that Empyrean has gone up and stayed up. Little bull flag there. Looks like a bit of move consolidation. A lot of pressure there, I suppose, from the top of that channel, the top of the range of 0.17, but about 0.17 looking for a move into the low 30s. And so far, the shares haven't done anything particular to deny such a scenario. We're also waiting for the 200-day line to sort of go up more closely, but we could be looking at the run up to a golden cross. And if we can get through that difficult 0.17 area, looking quite good. One of the mysteries of the week was why Star didn't go up rather higher than it did. In fact, it did hit our target there around 2.8 pence, but the joint venture news here very strong indeed with Endeavour Mining. Doesn't get better than that. So I think holders there maybe count themselves unlucky that we haven't gone higher. Target here by the end of next month, if the penny starts to drop about how good Endeavour is, up to 4 pence, and while we're above recent or the latest gap, I suppose, around 2.2 pence would be fair. Moving on to GS Chain, which is an intriguing situation. Here we had the trend line break there around a quarter of a penny, and we've now found support at and above that. Looking for the shares to at least get up to 0.57. Not sure what basis they would do that, but at least from a technical basis, I think there's a chance of them retesting August resistance and the 200-day line by the end of next month. Incanthera is next, and here for all those people who actually sit through a 1 hour and 2 minute presentation. The reward has been that the shares are up 50% so far this week, but the 50-day line rising. Was expecting this to be a mover, and it has turned out to be the case, and looking for 5.5 pence at the 200-day line as soon as the end of this month. It's a punchy call, but it's a punchy chart while it's above the 3 pence level. A stock which I don't think anybody's heard of or talks about is coming up next. That's why it's here. Integrated Diagnostic Holdings is not a name that trips the tongue. Here you can see that we've broken our first target there around 64 pence. Above that, looking at 90 pence by the end of next month, and celebrating that RSI 50 rebound that the shares have delivered as well. Another stock that nobody really looks at, apart from one or two notable people on X, is Imaging Biometrics. Here we've got the top of the channel there up to 1.4 pence. We're looking for that by the end of this month. It's a punchy call, but I think while we're above that 200-day line and with the RSI 50 rebound above 0.87, could get up to 1.4. Obviously, if you're conservative, you would allow for the end of next month. On to Jangada, and here you can see we're very close to our triangle target there at 1.5 pence. Above that, looking for a fresh leg to the upside, maybe as soon as the end of next month, hitting the second line there at 2.25 pence, especially while we're above recent broken resistance at 1.2 pence. Finishing off with Valereum, and here you can see that shares have revived themselves after a slight pullback there towards 6.25 pence. Above that, looking for the 200-day line again, 8.81 pence, but if we can break that, then the target area here is as high as 14 pence, and that could even happen as soon as the end of next month, given the way the RSI is bouncing in the upper 50s, which is a show of strength for such a situation. That's it from me today. More updates tomorrow.